When trading supply and demand zones, not every level of supply and not every zone of supply and demand really should be traded. And I've come up with a few odds enhancers that will make your choice and level selection of supply and demand just that much better, because the temptation really is to buy at demand and sell at supply. Now, what we need to do is, and I'm a huge advocate of fundamental and sentiment analysis before we even get into a trade. Always decide before you even look at the charts which way you really want to trade, right? We're trading strength against weakness. And what we always want to have a reason why we want to buy. It's really not good enough to just say, okay, well, there's a doji candle here, or there's a pin bar, an engulfing candle here, or it says oversold or overbought here, and an indicator for you to buy or sell that currency pair, right? We want to do our fundamental analysis. We want to know what the sentiment is. Understanding that sentiment can drive prices cheaper to where we want to buy, and just understand that fundamentals are really our filter and our north star as well. We want to just understand why we want to buy or sell a currency pair, so that should keep you on the right side of the market. And secondly, a second odds enhancer is strong supply and strong demand, sharp moves away from levels. So what I mean is, you don't really want to see shallow moves away from a level. You want to see, hard in and hard out, as I like to refer to it, right? So every level should have an element of a sharp move in and a sharp move out. So if we look at this example where we have the US dollar, New Zealand dollar, US dollar, and we have this really kind of a lot of demand coming in and then a lot of supply, right? That really is the an odds enhancer when it comes to looking at levels that are going to potentially hold, right? When you have a kind of a build up like this, although that's fine as far as the drop, I prefer to see areas on a price chart where you have demand, really going in at a steep angle, and then you have the same with supply. That for me is an A grade level, a level like this where you have a kind of build up and a drop. Although yes, it is a level of supply, it's not necessarily one of my favorites. So another odds enhancer when looking at levels is fresh levels. So fresh levels that are not touched. And what I mean by fresh levels of supply and demand that are not touched is, let's look at these this level here, right? So this is a level of, you can see where we've got higher highs and higher lows being made, right? Now we've got a level of demand here, and we can see here that we've been touched once, twice, 3 times, 4 times by these candlesticks, 5 times, 6 times, 7 times. The more a level is touched, the more it's a demand zone or a supply zone level is touched, the weaker it becomes. Now, if you're looking at it from a psychological point of view, this was once a bargain, right? So this was once a cheap and a discount, right? Because we know the psychology behind the move higher, because obviously buyers considered this to be an excellent bargain and cheap value area, and prices move higher. Now, when we touch this price level again and people are buying, the smart money really are the ones that are getting in first, right? And then what happens is the more times a level is touched, the rest of the herd start to identify that level as being a level that is being supported, right? So at first round here, when the level first touches, this is where you're getting in first on a discount price, right? And this is where your first opportunity to really take advantage of a potential bargain area is, right? Whereas once prices come back down to this level, this is seen now as just a normal level that everyone else can buy at, right, later on. And if you think about it, this really is no longer, or it becomes less of a value area, because now it's like, okay, well, everybody's buying at this area. And as we know, trading is a zero-sum game. For someone to win, someone else has to lose. This is where, the winners were understanding that we're getting in at a bargain, and this is where the herd starts to get in, because like I said, the more times a level is touched, the more times or the more other traders are going to start to see this level, right? And then they're going to start to buy. But by that time, smart money has made their money from the beginning, right? And they're no longer really looking at this level, unless obviously they still see it as a level of it being undervalued and a bargain, right? Now we've got a level obviously below here, and this would be a fresh level, right, of demand. This is a level that has been untouched, and when prices come back, you can see it kind of slightly just reacts off of it. But what you don't want is to see, if a level's been touched several times, 4, 5, 6 times, you want to try to maybe stay away or be very cautious when entering a trade. And what I would say is, if your fundamental analysis and sentiment lines up at this level and it's been touched several times, then maybe just enter with a smaller position size than what you normally would. But this is the time at the beginning of the move is where you should be really trying to enter and get the original bargains before really everyone else starts to see this level. And in this example on the Australian dollar, US dollar currency pair, this is just an example of, you can see, this is the original source of the supply. And we've touched once, twice, 3 times, 4 times, and then we eventually get a breakthrough. So try to just look at levels of supply or demand that have been touched several times. I would say anywhere between maybe 3 to 4 times. You better start just looking to maybe just scale in at a smaller position size if you still want to trade that level. But first touch, second touch, and potentially third touches of the level are the best opportune times to get in on a level.